my people? Hope you're all doing well. So the truth is, structure, I'm going to say hands down, is the most important thing when it comes to trading. If you know where the market is going, you're going to make money. How do you know where the market is going? By knowing structure. But sadly, not a lot of people have been taught it correctly, and I'll get into that straight away. So the classic idea of structure is a high, low, high, low, high, low, and a low, high, low, high, low, high. Okay, yes, this is correct basic structure. This is correct in the terms of these highs and lows are super, super important. If we're making higher highs and higher lows, we're looking for buys. We're in an uptrend. If we are making lower highs and lower lows, we're looking for sells. We are in a downtrend. But the market does not move as simple as this, and it moves more like this. So in an uptrend, when we break structure, like we do so here, we have a high, low, higher, high. Now a lot of people have their protected low here. Now this is valid. Then we put a higher low, higher high. So a lot of people say break of structure here and a new protected low here. Then the market will do this. It will break below their protected low and make a lower low. So then you will say it is a downtrend. Okay, you might have got stopped out. You'll look for sells, and then boom, we rip up again. This here is how the market moves. Any time frame, any chart, you will see this pattern daily, so many times. Okay, and this is how to spot it. You need a break of structure that gives you a zone from this high to this low. Okay, now the first tap into your zone, do not put that as your protected low. This first tap here is simply liquidity. Remember that. Do not have this as your protected low. Wait for this first tap to get swept, and then price will rocket higher. And again, this tap has to give a higher high. Okay, so it's like a fake break of structure. The first break of structure that comes from your zone is always fake, and then we sweep that, stop people out, and then we rip up, stop people out. It's the same for a downtrend. We have a low, high, lower low. So now we have a zone from this low to this high because we broke structure. We will then come back into the zone and most importantly, create a new low. Now remember, the first touch into your zone is not your protected high, okay? This is liquidity. So as price comes back in, this is not a shift in structure. This is a liquidity sweep, boom, lower low. People who do the basic market structure, they think lower high, lower low, lower low, higher high. Oh, we're in an uptrend, they get stopped out. Look for buys, boom, lower low, they get stopped out. And I'll show you literally on the charts, any chart, any time frame. Okay, now what do we have here? We're in an uptrend. We have a break, wrong button. We have a break of structure to the upside. So remember, that gives us a zone from here to here. Now what did we say? The first touch in the zone that pushes price higher is not going to be our protected low. Okay, we'll see what it does. Okay, you can see we put a first touch into the zone, boom, that pushes price higher. A lot of people now are going to have this as their protected low, and they're going to go high, low, high, low, higher, high. Not us. First touch that gives a higher high is liquidity. This is how structure actually moves. What do? We come, we stop them out. We respect our real protected low, which is still here. And we're going to make a higher high. Look at that. We make a higher high. So those who think downtrend in here, they're going to look for an uptrend with this as their stop loss. They get stopped out. They're going to think for a downtrend now with this as their stop loss. They get stopped out. They're not reading structure correctly. And it'll be the same thing for a downtrend. This is a 5-second chart. 5 seconds, just to show you this happens any time frame, any chart. So the first step was always finding that break of structure, which we have here. Now this gives us a zone from this low to this high. Now it's the same thing. Even though this is a wick, that's why I choose this scenario, it's the same concept. Can you see, when did we first come out of the zone? Come back in and push higher. We came out of the zone, we came back in, we push lower in this uptrend. So a lot of people are going to have their protected high up here. Not us. We know the first tap in the zone that pushes price in the direction of the trend is just liquidity. So we're actually going to look for our shorts above this, stop loss above the zone, and then expect real structure, lower highs and lower lows. As we can see, we come. Now, as we come above here, what happens? Okay, we can see that works out beautifully, but as we come above here, a lot of people are going to say now uptrend. They're going to look for a lot of shorts, longs, they get stopped out twice. Again, not us. We use them as our liquidity, we push price lower. Like I said, those diagrams I showed you at the start, that is proof. Okay, let's see if I still have it. I don't, but go rewind it. That is 100% how the market actually moves. Listen, don't take my word for it. Go back test it, and I promise you'll see it. Like I said, any chart, any time frame, you'll see a zone tap, sweep, lower low. This is exactly how I mark out structure, and this is my exact strategy, because if you know where the market is going, you're going to make so much money. How do you know where the market is going? By following structure correctly. If you want to see exactly my strategy, which is this in detail, and exactly how I mark out structure, you're more than welcome to join my premium Discord. The link is in the description below. Also have a free Discord. You're more than welcome to join. Any questions or anything you want help with, feel free to drop it in the comment section. If you found this video helpful, I appreciate any likes, any subscribes. Apart from that, appreciate your time as always, and I'll catch you in the next video.